ECB bond tool seen having no limits as steeper rate hikes loom. Sign up for the new Economy Daily newsletter. Comply with us at Economics and join our podcast. The European Central Bank will unveil an infinite bond buying tool next week to help markets higher modify to steeper and quicker interest rate increases than formerly thought, economists surveyed through say. Almost 80% are expecting the device, referred to as the transmission protection mechanism, will bring light situations for governments it's used to assist. Nearly all assume the liquidity its purchases create to be reabsorbed in a procedure called sterilization. As already record inflation techniques double digits, economists see the ECB accelerating price hikes following liftoff on July 21. But they nevertheless recall it in the back of the curve, with the Federal Reserve kicking off economic tightening back in March and now weighing an historical 100 basis point pass this month. The ECB conceded action become important after lengthy arguing inflation is temporary. But as bond yields inside the euro region's more indebted individuals jumped at the chance of the fantastic hikes due to the fact that 2011, officials determined they needed a device to run in parallel so economic coverage is powerful. The layout of the new tool will go away maximum discretion to the governing council, stated Christian Totman, an economist at Deutsche Bank. By being intentionally vague, central bankers hope that on the only hand the sheer life of this type of tool will be enough to avoid turmoil in financial markets, and on the other hand purchases of government bonds aren't frequent enough to substantiate allegations of financial financing. All the ECB's previous asset purchase packages brought on court cases in Germany, Europe's biggest economy, wherein ideals in financial orthodoxy run deep. Bundesbank President Joachim Nagel has mentioned the present-day measure must only be utilized in splendid instances and beneath narrowly defined conditions. Some of his colleagues desire the flexible reinvestment of maturing debt from the ECB's pandemic portfolio will keep yields contained, and that internet buying won't be wished if the brand new tool is massive sufficient. Nearly two-thirds of economists surveyed predict the ECB will sooner or later ought to use the tool. Almost 90% anticipate it to be unlimited in size, and 1 in 5 can envisage the location's valuable banks actively selling bonds they maintain in their portfolios now to save you fresh purchases from fueling inflation. Economists see the deposit rate, currently at 0.5%, rising with the aid of a quarter point this month and by twice that amount in September, accompanied by using smaller steps at every subsequent meeting till March. It's predicted to top at 1.25%. What economics says, a 25 basis point growth in July is almost honestly a done deal. The ECB has genuinely telegraphed this. David Powell, senior euro area economist. Click here for complete notice. I nonetheless anticipate a heated debate subsequent week on whether or no longer 50 basis points can also be feasible, mentioned Karsten Brzezinski, international head of macro at ING. I don't exclude that option. ECB officers say decisions will be data dependent. Since their June assembly, inflation has overshot again, at the same time as the euro has dropped to parity with the dollar for the primary time in decades. A weaker foreign money dangers similarly fueling price pressures simply because the economy slows and uncertainty over energy elements from Russia rises. The conflict in Ukraine remains taken into consideration the largest hazard to the outlook. Economists TD Securities led through James Rossiter say the focus will stay on bringing down inflation, irrespective of what. The ECB will need to set expectancies that they're probable to nevertheless hike charges even though the euro place enters a recession in the second half, they stated, as inflation could be maintaining strain up on the ECB via the fall. Copyright 2022 LP.